This really compounds itself once you start to say, well, can someone choose which score to use? And when someone can choose among which score to use, we can assume that the system, however it ends up working, is going to start choosing the score that lowers the cost to the borrower or lowers the cost to the originator. And that's going to start leading to bias in the scores, right? So scores would start to be higher and higher. So the loan level price adjustments would be lower, that the loans would look better from a credit perspective when you start to sell them to investors. So that seems like, oh, that would be a positive until the market decides to react to that.
Well, until the data comes in and loans start to default at a higher clip. And is that what would happen in your opinion?
Exactly. So like what used to be a 720 default rate would now be like a 740 default rate, or maybe a 760 default rate, right? Because everyone would want to start reporting their highest score, right? So let's say you were going to take out a loan, and you can go online and see what your credit scores are. And you go to, a mortgage originator, and they say, we're going to give you this loan. You have a 720 score. And you say, well, I have a 760 from blah, blah bureau. They say like, well, that's not the one we pulled. You say, okay, thanks. And you go call up the next guy, and you get this, you find the guy who will do the 760.